The JSE set to contend with shaky sentiments this morning. The local index falling to its weakest point since mid-July on Thursday, mirroring the global trend and signaling the extent to which investors are concerned about the effect of higher interest rates on the global economy. Matete Thulare is head of foreign exchange execution at Rand Merchant Bank, joining us now to give us a sense of how the JSE is shaping up in early trade. Mr. Thulare, good morning to you. Let's start with the Rand. Still seems to be volatile against major currencies, mostly, especially the US dollar. What's influencing the trade there?
Good morning, Bolly. I suppose not a great week for the Rand, unfortunately. I mean, we've seen the Rand weakening, for the 8th consecutive day against the dollar. But, this morning the losses are contained relative to our emerging market peers following the much anticipated Federal Reserve rate hike that we had on Wednesday evening. So if you just look at the Rand, the 1780 level is proving tough to break. I mean, outside of the rate meetings and a plethora of those rate meetings yesterday, the local market obviously is continuing to monitor the energy situation in South Africa. I mean, we're already heading into the 109th day of load shedding this year. I mean, that's close to 30% of the year already being just, with load shedding. So it obviously will factor through into the productivity and obviously the GDP numbers for the country. But also just from a global perspective, I think the sentiment is also centering around the ongoing East European geopolitical tension between Russia and Ukraine. And obviously the market is still digesting what has happened with regards to the Fed, the ECB, the BOE, the BOJ, all the global central banks obviously this week, releasing quite a lot of data points and headlines. And when you just look at the Rand, I mean, just on a year-to-date basis, we're already the 10th worst performing emerging market currency, having lost about close to 10% against the dollar. The risks to the outlook into the close of the year obviously include the heightened power outages from Eskom, the slowdown in the economies like China and the US, and obviously talks about a potential recession out in the UK, the US. And don't forget that just from a local perspective, we've got the medium-term budget statement from Minister Godongwane, in next month. And obviously, towards December, we've also got the ANC's elective conference. That is obviously going to be the much anticipated, after 5 years of Ramaphosa being in power. It's also going to factor through into what happens into the local Rand market. So quite a lot, to digest for the markets. And obviously, I think it's just been one of those weeks where despite, all the central bank news, it's also been about what happens from a global market sentiment in terms of all these key themes that are playing themselves out.
Let's stay with the theme of the global outlook, Matete, and talk about the major central banks which have announced their rate decision over the past week. What should we make of some of these sentiments shared and what it tells us about that very state of the global economy?
Well, I mean, we've been talking about the two I's for the past, couple of weeks whenever I've been here, which is inflation and interest rates. A host of central banks from across the world yesterday raised interest rates again following the Federal Reserve on Wednesday evening. I mean, already the Fed has spoken about their fight against inflation that is obviously sending shockwaves throughout financial markets and throughout the whole global economy. You look at the BOE out in England yesterday, they also raised by 75 basis points, and they said they would also continue to respond forcefully to fight inflation despite the economy probably being in a shallow recession. You're looking at, the Fed out in the US. They've also now hiked by another 75 basis points on Wednesday evening already. Just yesterday afternoon, the markets are starting to digest the potential that, we could see another 1.5% increase in the interest rates at their next two meetings. I mean, already the probability of them hiking by 75 basis points in November, that was up, it was around 60% 3-4 days ago. Already that probability has moved to 70%. And just a week ago, already the the December meeting for the Fed, the odds of them increasing by 50 basis points, that was around 46%. After the meeting on Wednesday evening, that probability has now actually increased to about 70%. So it just shows you, already Jerome Powell is coming out to say that they want to act aggressively now, get this job done, and obviously keep at it until it's done. And obviously that's also factoring through into what happens locally. Lesotho Kganyago also yesterday being really hawkish about interest rates. Already you saw two members out of that MPC wanting a full percentage point increase in interest rates. And obviously, already it looks like the markets locally are starting to say potentially we could see another, 1.5% increase in interest rates over the next 12 months, and potentially that will leave repo at around 8%. So it just shows you everybody's trying to fight inflation, but also at the same time, we're also trying to, counteract what's happening from a global recession point of view.
Yeah, let's touch on the commodities for a bit. The gold prices inching lower, with the oil also edging down, and you mentioned the word recession fears. They remain. What should we make of these developments?
Quite an interesting one, because, already you're seeing gold falling close to a 2-year low. And, if you cast your mind back to 2-year lows, that is during the period of COVID. Now, Jerome Powell obviously has pledged to crush inflation, and obviously the dollar has surged on the back of these comments, and then obviously gold is taking the brunt of this, and that's why it's actually sinking into a bear market. The gold's biggest struggle over the past few months has been the persistent strengthening of the US dollar. I think up until we see a significant correction in the dollar, gold will struggle to recover. It's already had a really crazy year. We saw it, rallying quite high, close to the $2,000 mark, and obviously that is after the geopolitical tension when it started in February with Russia and Ukraine, and then after that it has slumped quite a bit, especially after all these interest rate increases from the Fed and obviously other global central banks. Already just this month, we have seen gold, being on the 6th consecutive monthly drop. So obviously that's why now we're actually inching towards a bear market territory. That is a recession in the gold market, and I suppose it is going to remain vulnerable, especially if the selling pressure continues despite inflation in the US not easing. But it could start to stabilize. But as we say, it's all about whether inflation, interest rates, what the comments are coming from the Fed, what's coming also through from the geopolitical tension, the gas situation, the energy situation out in Europe. It's a plethora of issues that will unfortunately factor through into both the gold and oil markets over the next few weeks.
It's a very tough economic outlook, no matter which way you look at it. Let's conclude the conversation with Massmart. Does the delisting of Massmart make any sense at all? And how do you anticipate the retail sector to react to this?
So yesterday we saw a circular being issued to shareholders of both Massmart and Walmart, setting out the fact that the full terms and conditions of Walmart's intention to buy out Massmart shares, which it doesn't own, and the standby general offer. Now, there is going to be a general meeting of shareholders that will be held at Massmart's offices on the 21st of October. And if the share scheme is approved, then the expected, termination of the listing of Massmart on the JSE will take place on November the 8th. Now, I think the one thing that we really need to, really bear in mind is the fact that Walmart at this point in time, they're not thinking about the business today or tomorrow. They're thinking about 5 to 10 years down the line. If you think about Walmart just from a retail perspective, their biggest rival is Amazon. Now, Walmart is a retailer and Amazon is a digital company, both offering and competing for the same market in Africa. Africa is already one of the fastest growing populations in the world, and obviously they need to look at how do they actually springboard into this emerging market. And when a company like Walmart looks to take over a Massmart, they want to focus on doing what has worked for them out in the US and the rest of the world, and decrease things that are not really going to create wealth for their shareholders, and obviously, promote their products and services. So I think if anything, we need to have a longer term outlook in the retail space, especially since Walmart has obviously, thrown down the gauntlet. They really want to invest in Africa, and they see this as something for the long term.
Head of Foreign Exchange Execution at Rand Merchant Bank, Matete Thulare. Let me thank you very much for that markets update.